Technology is transforming the way we live and work. And in the world of finance, we are at the start of a digital revolution. The market for sustainable investing.
Hello, everyone. Good morning, good afternoon, and good evening. And my name is Coşkun Cangöz. I am the head of government debt and risk management here at World Bank Treasury. Welcome to World Bank Treasury's webinar series on public debt management. We usually organize 4 webinars in every calendar year, but this year it's an exemption. So this is our 5th webinar actually that we are organizing, and it is about blockchain technology and how we are, as the debt managers, going to use this technology while issuing government securities. So since debt managers, of course, we are simply asking what is in it for us. So fortunately today we have colleagues from the World Bank Treasury with us who issued the bond this August in 2018. And bond is the world's first blockchain bond. And also we have a colleague from Austrian Treasury. They started using the blockchain in the bond auction since October this year. So we can answer some of these questions in today's webinar.
Banking and payment, also at the World Bank Treasury. And we have also, but not around this table, Mr. Marcus Stix, who is Managing Director of the Austrian Treasury and the Debt Management Office in Vienna. Marcus will join us remotely by phone later on in this presentation.
On my side for the presentation is to really walk you through the transaction that we did on the blockchain platform. We do not have time to go through the underlying technology, so it will just be focused on the transaction, and then I'll pass it on to my colleagues that would speak more broadly in terms of the benefits that we see, not only from a capital market perspective, but more broadly in terms of the World Bank and the World Development work. Blockchain, I guess, it seems to be the buzzword that, you in any corner that you go these days, you're hearing something either related to blockchain. Earlier this year, in fact, last year, the bank launched in June 2007. The bank launched a blockchain innovative lab. And basically, the main idea was to really build on the understanding of blockchain and see how it can be applied on the capital market side, and as I mentioned, on the development front as well. Part of that setup, we decided to look into exploring launching a potential blockchain bond. So over the last year, we have worked across the bank with many partners. Actually, we partner with CBA, which is a bank in Australia, some of you may be familiar with, that also have keen interest in the technology and have also had a blockchain lab on this side globally as well. And the key purpose was really to see how we could launch the first blockchain bond. We were working across many groups because it was one of the first projects actually that I, as head of funding, worked across several groups outside the finance complex, particularly on the technology side. The idea was basically because it involved not just issuing the bond, it involved really being able to build the platform that the investors would be able to act in. And it was done specifically for a couple of reasons. One, we thought to reduce the risk component to the transaction. We wanted to do it in 2 steps. One, to be able to transact on the blockchain without having to worry about the cash component. 2, we also explore possibility of having doing the cash on chain, but that would involve either having some sort of cash equivalent, like say a potential like a token, a cash token, that would allow us to settle the transaction, the cash component of the transaction on chain. So we discovered in the process, particularly in that case in Australia, if we did that, there is a tax that would be imposed on token transactions. And what I mean token transaction, it would be a one-to-one. We would basically, if an investor has $50 million, would get 50 million worth of tokens that would be able to transact the settle the bond. So because the Australian see it, or the sisters see it as an FX exchange, there was a tax on it. So we decided that it made sense for, for operational risk reasons to leave the cash settlement off chain. So this gives you sort of a quick summary. We saw many investors, typical investors that would invest in our bonds, part of these transactions, official institutions, insurance companies, asset managers, as well as banks. What we plan to do, this is basically we build a platform to have this primary issuance of the bond through the blockchain. The next phase, what we are working on now, is to build what we call the secondary market component of the platform. Basically, to increase liquidity in the transaction, we will be having more market makers on the platform because CBA acted as an underwriter as well as the platform operator. We will bring in more market makers that will be able to increase and build on the ecosystem on the blockchain itself, and where investors would not only be able to buy through the primary market on the blockchain, but also have the opportunity to be able to sell their holdings or participate in the secondary market on the blockchain. This blockchain bond was it's the world's first transaction, globally transaction to be, as I said, created, registered, and allocated and transferred to the blockchain. And what we managed to do for this transaction is to really understand, which was the key. We wanted to understand the technology and understand the broader use of the technology. At this point, what I will do, I will pass you on to my colleague, who will go through, what we learned, in terms of the efficiency, transparency, automation of the system on the operation side, and also potential for broader use of the technology in the development space.
Okay, thank you very much, Andrea, for this.
The potential of digital ledger technology, but it was again indicative of the potential for investors to get a much more real and intimate connection with issuers without other parties in between. Another point which I will make is inherent in blockchain again is this element of trust, immutable, append-only record will inherently provide a higher quality of data than the replication that exists in current markets, where you see information from one custodian having to be reconciled with the clearing system with another custodian, that custodian with perhaps a broker-dealer, an asset manager, and so on. All of those reconciliations as transfers of securities occur through a buy and a sell are the elements that add up to settlement being measured in days, T plus X in days. The current market structures, which work beautifully, but are inherently slow. Perhaps we don't sort of realize that the current market structure is slow because we're so used to it. But this transaction again indicated that there might be the possibility of really changing settlement times. Andrea discussed the potential for what we sometimes refer to atomic settlement, or having smart contracts to settle a transaction. If the issues of digital currency can be resolved, if digital currencies can be made available by central banks, then the potential for the ownership of the security to transfer simultaneously with the transfer of the digital currency we really could see settlement taking place in T plus X, where X is measured in seconds. And that, in and of itself, would be a great advance for fixed income capital markets. As Andrea said, there was no digital currency, no central bank digital currency that we could use, and tokenization had all of the problems of tax that she mentioned. Similarly, we briefly considered cryptocurrencies, but they are illiquid, too volatile, and the consensus methods are associated with very high energy use and carbon emissions, all things which are anathema to us, the World Bank. So for those reasons, we would not consider using crypto to facilitate rapid settlement. We are, as we move forward, Andrea talked about the various enhancements that we're looking to put on this platform to continue our learning. We've already got market makers on the platform. We're looking to see secondary market trading occur on the platform. But we have been surprised. We knew this was going to be a significant transaction, but the level of interest which we've had in it has really been extraordinary. And while we have no clear sort of plans beforehand, just to give you an indication of the kinds of conversations we've been getting, there are quite a few parties that have reached out asking whether or not they could join this platform or participate in the development of a larger platform. We've had conversations with folks that are looking closely at how this technology might be able to connect investors with issuers more clearly. So there's a gravity that's developing, a weight of interest in how this technology could apply in different components of the current fixed income marketplace. I want to be clear again that our transaction with this single bond on it, this single bond on this little market, this tiny market, is very different from the enormous scale of the broader fixed income markets. And I think there'll be quite a bit of time before we see fundamental restructuring. We don't have a sense as to whether or not the entrepreneurs and the innovators will start bringing in new functions and facilities in this market. We don't know if the existing players will start reforming current structures. I recall the CEO of DTC has indicated that the only entity that will disintermediate DTC is DTC, which is sort of a statement of intent that he realizes the technologies could have a fundamental impact on fixed income markets, and he's determined to keep pace. Quite recently, I think along with Accenture, DTC had performed a capacity test to confirm that digital ledger technology might be able to handle the volumes that DTC handle each day. And it was apparently a positive test that did achieve the throughput needs that they would have. I think that's an indicator of an existing market infrastructure provider making significant investments to make sure they're abreast of how this technology could perhaps change their own offerings. We know that many of the investment banks and custodians that operate in these markets are also making investments to stay abreast of what the technology can do. One of the reasons we thought it was time for us to try and explore and learn from this technology, looking at the Australian market, the Australian Stock Exchange had chosen in 2016 to replace their equity settlement system using digital ledger technology. Excuse me, I'm losing my voice.
Yes, please.
Thank you so much. So the equity settlement system is part of national infrastructure for settling equities in Australia. In 2016, it seems like an age ago in terms of this technology. yet they were quite confident in the technology to be able to replace fundamental market infrastructure with it. That was a signal to us that the technology is clearly advanced enough and has demonstrated capacity to help and change markets. What we don't know is how quickly they'll change, where that change will be driven from, whether internally or externally. But I think this is something that all of us, all of you, should try and keep an eye on, as changes to these market structures will have a fundamental effect on how we conduct our own business.